trying to do here is to try to figure out, there are two things that we are going to do is how does multiplier works, so yesterday we have said that the way multiplier work is, let's say I give you 100 rupees, and then if your income is 100 rupees, out of 100 rupees you are actually spending a portion of your income. Let's say you are spending 60% of your income. Now when you spend 60% of your income, basically out of 100 rupees, that means you are spending 60 rupees, which means this 60 rupees is going as income to someone else. That someone else is also going to spend, assuming that the marginal propensity to consume is 0.6. So another 60% of this 60, which is 0.36, so that's how it works. So if originally I'm spending 100 rupees, as you will see through this particular example, it will lead to an increment in total income if I'm considering the economy as a whole. So if I'm giving 100 rupees to Yagga, for example, because Yagga is also spending, and if the economy is comprising of all of us, you will find that the total increase in income is much more than the original 100 rupees which I have given to Yagga. So how does we work? So in this case, what we are doing is we are considering a very simple example, and as I said that this is something, this I have taken from the question which I have set in the previous exam. So here I'm considering an economy which is not trading with the outside world, and therefore you see only C, I and G. Again, what is C? C is the consumption expenditure, I is the investment expenditure, and G is the government expenditure. What I have also done is I have given you the component for consumption expenditure, which is, this is the autonomous component, which I have said yesterday that irrespective of whether you have income or not, you are going to spend 50 rupees. So this is the autonomous. It does not depend upon either on your income, or it does not depend upon your tax. And this is what we are calling as disposable income. So disposable income is basically your gross income less tax. And this 0.8 is my marginal propensity to consume, which is a function of your income, And I have also given you some other additional information, which is your investment is 200. The original tax rate which the government is imposing is 200, and the government expenditure is 100. So my question was, how do you know what is the equilibrium level of income? If I were to find out what is the equilibrium level of income, what you have to do is I have to just put in the value, So in this case, I put, instead of C, I put this amount. So 50 plus 0.8 minus Y minus T. Instead of I am putting, I already know I is equal to 200. I am putting 200. Instead of G, I am putting 100 because G is given as 100. And here T is given as, the original T is given as 200. Okay. So basically equilibrium level of income I can therefore find out as follows: 0.8 Y minus 200 plus 200 plus 100. Okay. So if I am actually using this, what I am getting is 1 minus 0.8 times Y, because this 0.8 times Y, I am bringing it over this side, and I am actually adding on all these things. If I am adding on all these things, what I am getting is 190. That you can do. So if I rewrite this, finally I am getting Y, or the equilibrium level of income, as 190 over 0.2, which is 950, and this is what I think Saurabh has got. Everyone clear with the first part of the question? Any question?
सर
Yeah.
Yes.
मैंने ना सेम चीज करी थी, बस मैंने 0.8 को 8 लेके किया था क्योंकि मेरे को वो 8 ही दिख रहा था,
Okay,
तो
that's
इसलिए
fine.
गड़बड़ हुई.
That's fine. So long the process is fine, it's okay. Now, in the second part of the question, my question was, what happened? And this is how the multiplier is going to kick in right now. What happened if the tax is going to come down from 200 to 100? What happens to this? Or in what way the equilibrium level of income is going to change? That was the second part of the question. So to do the second part of the question, I again redo the same thing. I redo the same thing in the sense that rather than writing here as 200, I'm just writing here as if the income is falling to, if the tax is falling from 200 to 100, this is what I'm getting. So rather than having 190, I will be having here, if you do this calculation, I will be having here this as
270, sir.
2
70.
270.
70.
Yes, sir. 270, sir.
Are you sure? Or
Yes, sir.
230? Because I'm getting 230.
I got 270.
270 आएगा सर.
270 I know. Okay, I
Yes,
go
sir.
with you. And if I'm getting 270 here, uh, guys,
So then why
एक बार check कर लेना because I'm getting 230. But let's say that who is correct. Maybe you are correct, but I'm getting 230 here. So if I'm getting 270, basically what happens is how much this is coming out?
1350.
150.
Huh?
1350.
1350.
1350.
1350.
1350. No, but before heading for that, let's try to do this. 50 plus 0.8, ये तो छोड़ दो. If I'm just doing this portion, so basically I'm getting 50 minus 100 times
Minus
0.8 is how much?
So minus 80 plus 200 plus 100.
सर 350 माइनस 80 हो जाएगा ना, तो 270
Yes.
आएगा.
Much. So, okay, so in that case, what is the increment in income that what we are getting? So the income, so initially when your tax rate was, when your tax was how much? 200, my income was 950. And this happened when my tax rate was 200. When the tax rate came down to 100, my income increased to 1350. Okay, so the net increment in income is how much? 1350 less 950, which is
400.
400. Okay, now let's try to do another thing. So basically, because of what we are saying is because of change in my tax rate, there has been a net addition in the level of income by 400 rupees. Okay, so can you actually can we try to do this in a different way? So this is basically how the because of change in your tax rate, we are seeing a change in your net income. Is it clear to all of you are clear with this? Please ask me
Yes.
if you have any question. Now yesterday I actually I actually wanted you guys to, let me show you this multiplier also, something that we did yesterday. So yesterday, if I just give me a second. yesterday I said that your marginal propensity to consume is 0.6, because in case of India, if I'm looking into the consumption expenditure, it is close to 60% of our demand side of GDP, right? So if I try to do with the example that we were trying to do yesterday, so basically 100 I am given to Yagga. Yagga is spending how much? Yagga is spending 60 out of that 100, right? So 0.6 out of 100 is something what Yagga is spending. So this 60 becomes someone else's income. Now, so this 60 is becoming someone else's income. So that someone else is also going to spend 60% of 60. So basically, I'm actually rewriting this as, can I rewrite this as 0.6 times 100? Because 60% of 60 is how much? 36. That is exactly 0.6 times square, right? Now that 36, when this guy is spending, it is again becoming income of someone else. So basically that someone else is again spending 60% of 36. This is exactly raised to the power 3, and this will continue. So this is basically we are getting a geometric progression. So I can rewrite this as 1 plus 0.6 plus 0.6 square plus 0.6 cube plus, okay, and this basically become 100 over 1 minus, what is the common ratio? 0.6. 0.6, and if I simplify this, I get 250 rupees. So what it is basically saying, initial 100 rupees which the government is giving as income is leading to economy wide creation of 250 rupees. Okay, so this is what in a simple term multiplier is.